everybody, and welcome to Vintage Markets Inside the Charts. My name is Tamar Mehr from Trade with Precision. So US stocks entered correction territory on Thursday, with the S&P 500 down 10% from the peak and the all-time high it made here in mid-February. So this sharp sell-off also brought in on Friday some deep buyers, and they were able to push the price of the S&P about 2% higher. So what we've got here really is a move from a higher high to a lower low. We had some strong overextension, meaning quite a distance between where price action was trending and the moving averages. So we're seeing some pullback, some release of this buying pressure. And I'm interested in this level, the area around the 57.74 mark. If we take a look here on the weekly, we can see that it has been a level in this market in the past. We moved again from that higher high to a lower low. So we broke the uptrend that we were in on the weekly chart. And this is currently just a deeper pullback. So for a continuation of the selling pressure, I'll be looking for any signs around this level that the sellers are coming back and look to push the price to another lower low. If, however, we'll see buyer accumulating underneath this level, then I'll be looking for a move toward the next level, which is in and around the 59.20. The reason for that actually comes from the higher time frame. So this time frame, the monthly chart, is still in an uptrend, and what we've done was simply pulling back into the buy zone, that area between the 10 and the 20 moving averages. Similarly, the Nasdaq. So if we'll have a look here on the Nasdaq on the monthly chart, we are still in an uptrend, pulling back into the averages. Taking a look here on the weekly chart, we also moved from a higher high and an all-time high to a lower low, and the level that I'm watching on this market is around the 2500, which again, we don't have a trend here on the weekly chart. We simply broke the uptrend. So I'm looking for a similar scenario to the S&P around this level. Moving on into another mover and shaker in the market, and that is the chart of gold. So gold has broken through the $3,000 an ounce on Friday. And while part of this rally can be attributed to central banks' buying spree, gold is a traditional safe haven in turbulence time and also a potential gauge of market fear. And we can see here on the weekly chart is a very nice and strong uptrend, and we currently push here to a higher high. Looking here on the monthly, and we can see the strength of this trend. Moving averages 10, 20, 50, or fanning, all in the correct order for an uptrend. And once again, we are overextended. So I'm looking for a bit of a pullback, really some of this very strong buying pressure. So if we'll take a look here on the daily chart, there are actually two areas that I'm looking at. So the first area sits around the previous swing high, and that is the 29.55 area, and the bottom one sits around the 29.30. Now I'd like to add the Fibonacci retracement from this latest move here on the daily to the high, and what we can see here, and we'll do that on the 4 hours so we can see more details of this price action, is that we've got the top part, this previous swing high, is clustering with the 0.38% level, but the area lower, the area around the 29.30, is clustering with the 0.61% retracement. So I'm looking for a pullback into that 29.30. However, we might see a more shallow pullback in the context of the daily to this 29.55 area. Lastly, I want to take a look at the chart of pound versus the US. So market turbulence has pushed the US dollar lower against many of its trading peers. And despite a lack of momentum in the UK economy, we actually saw the pound strengthening against the dollar. So I want to start here with the daily chart. And on the daily, we can see we are back into an uptrend. What we can also see is that we touched the round number and a level level of support and resistance around the 1.30. So if we'll take a look here on the weekly chart, we can see that the weekly has broke through some significant levels. So here we've got the 1.28 and a lower level of 1.27. So we could see some selling coming off of this level of 1.30. It was also the breakdown level on the way down. So if we'll see a bit of a pullback, because we are reacting to a strong level, and actually if we'll take a look here on the monthly chart, we can see that we made a lower low, so we might be at risk of looking at this area as the next potential lower high on this monthly chart. Then I'll be looking, as the market is pulling back, for signs that the buyers are returning into the market. Now, my preferred level sits lower down at the 1.27, so it will give me enough room to move before we come back into that 1.30. But I'm also keeping a close eye on this 1.28. On the weekly, we had a sharp turn. We do have an uptrend and we do have convergence here from the momentum indicators. So if we'll take a look here on the daily, and we'll just plot the Fibonacci retracement of this latest move on the daily chart, then we can see here that the lower level that I've got, the 1.27, is clustering very nicely with a 61.8% retracement, so a bit more of a pullback. However, the higher level, the 1.28, is clustering with a 0.38% retracement. So once again, a bit more of a shallow pullback. Now, in this case, unlike gold, because we are coming into some area that we have seen selling pressure in the past, my preference is for a further pullback, and it sits around that 1.27 level. Happy trading, everyone. Bye for now.